Bank of America described this as a coming toxic recession, a recession that will spread to all areas of the economy. Over the next 5 years, over $2.5 trillion of commercial real estate debt will mature. And over 70% of that commercial debt is owned by smaller banks with less than $250 billion of assets. Even Elon Musk tweeted about this, saying that this is a looming crisis and this will affect residential mortgages also. In today's video, we're going to talk about this looming financial crisis with commercial real estate and what effects it has on the economy and what is going to happen. How did we get in this situation and different ways that you can protect yourself. Now, before I go on, please be sure to subscribe to this channel for some content around the housing market, personal finance, and the economy as a whole. Now, the main reason commercial real estate is a looming issue is because a lot of businesses and corporations that own these type of properties are now seeing a decrease in occupancy rates in these buildings. And that's largely due to people working from home and corporations allowing their workers to continue working at home. And that trend is not stopping. More and more companies are allowing their employees to work from home. But what that does is that increase vacancy rates in these commercial real estate. And so now that a lot of companies that own these commercial real estate are not receiving as much income as they used to do pre-pandemic, they now have to deal with restructuring their loan or refinancing their loan. And so a lot of these loans were bought when interest rates were near 0%. And now that they're required to either pay off the loan or restructure or refinance the loan, interest rates are significantly higher. And so that will increase the amount that they will have to pay per month for these particular asset classes. Now their payments will more than double, even triple in some cases. So either the companies will just have to sell these properties at a significant loss or restructure the loan and start paying a higher monthly payment for these properties. And so you can see this has a rippling effect across the housing market as a whole. So if you look at a smaller bank and you have this credit issue, it is now more expensive for them to own these properties. And they carry out that cost on people's accounts, on people's deposits. As more and more depositors learn about, hey, this smaller bank has this issue with commercial real estate, this may be a repeat of Silicon Valley Bank, where a lot of depositors go do a bank run and try to get their money out of the smaller bank into a larger bank, because they are fearful that these banks will not be able to sustain themselves when their credit is due for these commercial real estate. All right, so now I'm going to share some articles with you all, share some charts to better explain the situation. All right, so in this Market Insider by Business Insider article, they talk about how commercial real estate is widely the next shoe to drop in lending standards for commercial real estate loans to tighten further. So this is from Bank of America. And so Bank of America Chase, the biggest banks in the world, are saying, hey, we're going to have an issue in this asset class, and this can be a rippling effect on smaller banks and just on the housing market in general. And then this article just starts talking about the occupancy rates in offices across the country are still far from their pre-pandemic levels. And here is saying that occupancy rates are still less than 50% as work from home trends persist, right? So you have more and more companies allowing their workers to work from home and things of that nature. Right here, it talks about shares in commercial real estate, like these different funds that are directly tied to commercial real estate. And all of these portfolios are doing horrible right now in the market. They're trading well below the lows seen at the height of COVID-19, right? And it's just 6% above its lowest levels since the inception of the fund in 2012. And so you have it now affecting like the stock market, the bond market, portfolio, and different things of that nature. Right here it says, according to Bank of America, U.S. regional banks account for 68% of commercial real estate loans, much more than their mega cap banking peers. And so you have these smaller banks where a lot of investors went to get loans on commercial real estate, and they're lending them out to people. And this happened a lot during the pandemic because interest rates were low and things of that nature. But now that these investors are coming back to restructure and refinance their loans, they're going to find out, wait, I cannot afford this restructure anymore because now my payments are doubled or tripled, right? How am I going to be able to pay you off, bank? And so the bank is going to have to restructure, have to take a discount, going to have to help the investor, and it's going to go into the news, and then other people who are just regular depositors in these banks are going to be fearful and be like, oh no, should I trust this bank, right? Maybe I should go to a big bank like Chase or Citigroup or Bank of America to hold my funds. This can have a lot of lasting effects. And even JPMorgan Chase put a number that over nearly $450 billion in commercial real estate loans are maturing in 2023 alone. So this year alone, out of that $2.5 trillion that are maturing in the next 5 years, 450 billion of that is maturing this year. And then right here, this article states that 1.5 trillion is due in the next 3 years. And the bulk of this debt was financed when base interest rates were near 0%. This debt needs to be refinanced in an environment where rates are higher and values are lower, and in a market with less liquidity. So not only do you have rates that are higher, you have values that are lower because people are not buying as much real estate because these rates are higher. Even when you go to restructure your loan, they're going to see that the price that you paid for the property, it's now worth less than the price you paid for the property, right? Your price that you paid for the property was significantly more than what's the value of it today because of these interest rate hikes. And coming back to what Bank of America said, they say they're just looking at the outlook of commercial real estate, and they're saying, you know, combined with a mounting wall of debt due to mature soon could lead to a wave of defaults that sting bank stocks and add to a coming toxic recession. And this is another newsletter from a very reputable company and them just talking about this thing. And they're saying that this $2.5 trillion that are due in the next 5 years is far more than any 5-year period in history. Rates have more than doubled, and commercial real estate is only 60 to 70% occupied. And they're saying that 70% of commercial real estate loans are owned by small banks. In another article, another expert said that whatever happened with Silicon Valley Bank was just a blip. Like this coming recession, this coming financial crisis with commercial real estate is much larger, right? It's a much larger time bomb. And talking about small banks a little bit more, it says the problem is that most loans in commercial real estate have been made by banks with less than $250 billion in assets, right? Many experts fear that many borrowers will default, which will be a huge problem for smaller banks as they will have to mark down the value of these loans, right? And this is going to create a loss on their balance sheet. Now, looking at the chart, you see right here to describe this chart is that small banks grew lending in the sector by more than 20% in March from a year before, as the Fed was rapidly increasing interest rates. Large banks, on the other hand, increased their exposure by only about 5%. So you see this increase right here. Smaller banks always had more commercial real estate loans than larger banks. You know, larger banks, they're super diversified. Hopefully they learned from 08, 09 recession. And so they're not going to put a lot of their eggs in one basket. You can see larger banks, this darker line is usually 5% or lower, where commercial real estate in smaller domestic banks were a little bit higher than 10% usually. And then when the pandemic was happening and you had lower interest rates and then the Fed started to hike these interest rates, you see this big increase, especially towards the end of last year, beginning of this year. And now their exposure is closer to 20%, which is crazy for these smaller banks. So let me know down below what you all think of this looming financial crisis that a lot of big banks like Bank of America and Chase is talking about. What rippling effects would it have on the economy? Will this produce more and more bank runs similar to what happened to Silicon Valley Bank? Or is this a much bigger issue as more and more people are working from home and commercial real estate is not used as much as residential real estate? Now with commercial real estate, I do believe that includes like apartment complexes that people do live in, like multifamilies, and I don't think that should be a huge issue. But like think about skyscrapers or office buildings and things of that nature. Like those same companies that own those asset class owns residential real estate, and it's going to show on their balance sheet. Their stock price is going to go down, and that can affect different areas of the economy. All right, be sure to subscribe to this channel, comment down below, and like this video.